What's up, YouTube? Eric here, Mr. Fired Up Wealth. Excited to bring another video today. I'm going to cover 3 of my highest conviction stocks. Now, I've already covered in the Discord community, I gave my top 25 high conviction stocks. Conviction stocks aren't necessarily the highest growth stocks. So what we've done is we've developed a system in the community to rank these stocks based on margin of safety, management score, growth score, and so on. So I'm going to provide you these 3 stocks, give you a little information about each one, and then I'm going to break down these scores for you, give you some metrics, because every investor is different, and these metrics could be helpful to determine if it's a good fit in your portfolio. This is going to be a great video, guys. I'm excited to bring it to you. Without further ado, let's get started. Up first is NVIDIA. I just covered this stock, did a 10-minute video, got a bunch of views, actually did really well on YouTube. You can check that video out. I'll put a link above. But these guys have so much going for them. You think of gaming, AI, AR, VR, self-driving cars, autonomous vehicles. You think of cryptocurrency. These guys have all these secular growth trends going for them, and they really are best of breed in a lot of different areas. So check out that video if you want more due diligence on the stock and on the company. But these guys are crushing it. You know, 47% of their business is from gaming. Data center is 40%, absolutely crush it in data center. One thing to note is if the ARM acquisition doesn't go through, it could impact the stock negatively. You know, I like this stock as a high conviction stock because it's a kind of a swan stock, sleep well at night. You know, if you look at the growth and the valuation, you could argue it's not that expensive, and it's one that I feel confident that's going to do well over the long term. They're starting to expand their reach into other areas as well. Like here, 6% you can see of their FY21 revenue is professional visualization. Also in the automotive, it's only 3%. You think of autonomous vehicles, they have a ton of total addressable market. This is also a great company to work for. It's a very green company, a sustainable company. It's been around for a long time. It was founded by Jensen Huang, who's still the CEO today. Back in '93, he founded this company, and they've been crushing. You can see some of the numbers here. In 1999, they did the IPO at $12. They've done a bunch of splits since then. In 2001, they won the Xbox, and that was the first semiconductor company to hit $1 billion in sales, and they've just been running ever since. Really where I see them doing a lot more business outside of gaming is in the data center. So I'm a big cloud guy, and I believe in the cloud and the data center. These guys are a big part of that, but they're also covering so many other areas like I talked about earlier. Let's look at the metrics that I broke down for this stock so you can kind of see if it's a good fit for your portfolio. All right, guys, NVIDIA is up. So it's sitting around $200 a share right now. The market cap is just under $500 billion. It's probably going to be $1 trillion company at some point. So safety score. What do I mean when I say safety score? Safety score simply means if I invest in it right now and I hold it long term, say I'm planning to hold it for 5 or 10 years, how safe do I think that is an investment? Am I going to lose money? Is it a business that could go out of business tomorrow? So that's what I mean by safety score. And this is important when you're thinking of conviction, because for me, conviction, here's what this means, right? So when you're younger, you're trying to grow. You want growth. You're going to take some more risk, potentially depending on your risk tolerance, suitability, all those different things, your goals. Every person's going to be different. But let's just say that you are young and you're going to take some risk trying to grow that wealth. You're going to invest in higher risk companies. The beautiful thing about NVIDIA is I think it actually fits in multiple types of portfolios. When I think of conviction, I think of capital preservation. So I've already made my millions and I need to figure out a way to invest in companies to grow. I still want to have growth, but I also don't want to take super high risks at this stage of my investing career. Your stage where you're at might be completely different. So this safety score is how confident I am on a stock, you know, if it's going to be around in 5 or 10 years. So the safety score at NVIDIA, you could probably easily give it a 10. I'll give it a 9. The reason I give it a 9 is you could say, well, maybe it's a little bit expensive. I could argue that it's not expensive here, that it's inexpensive and it's going to grow into its valuation. Next up is going to be growth score. So of course, that's self-explanatory, right? From a scale to 1 to 10, the growth score is 8. Now, NVIDIA is a nice growth company. It just doesn't give you that hyper growth. You're not going to get 150%, growth year over year quarter. They've been around for a really long time. But 8 is still a solid score for a company that's been around since the 1990s. Moat score. So how many competitors do they have? What's their moat? You think of like true moats, right? You think of Disney. That's one that pops in my mind, a moat, right? So what's NVIDIA's moat? There's certainly competition. You think of like the data center side, they've got plenty of competition. The gaming side, plenty of competition. You've got AMD, you've got Intel. There's a bunch of competition in the space, but they really are best of breed and they're dominating their competitors at this stage in the game, especially when you think of data center. So their moat really is pretty high. It's probably about a 9. Now that could change as time goes on. And that's why you never just buy a stock and marry it and say, I'm going to hold this stock forever. The story could change. You have to constantly stay on top of your stocks, do your homework, watch earnings. If the story changes, completely different. And the management score, if Jensen Huang ever resigns here, if he just suddenly quits or something happens to him, that's a huge risk to the company. So when you think of safety score as a 9, of course, there's elements you can't control that could change that score. And so moat score is a 9, but that could change. You think of technology. Technology moves fast and there's always disruptors. Right now, today, their moat score is a 9, but with technology, that can change very quickly, so you have to stay on top of your investments. Management score, out of my top 25, there's a handful of stocks that get a 10. Jensen Huang is about as solid as you're gonna get, so he gets a 10 for a management score. Up next, guys, you know this is one of my favorites. One of the few people that's been bullish the whole way through on Snowflake. I told you it was a buy in that $200 range, that it would probably go below $200, and it was a good buy. And if you bought in that area, it's up a lot higher. In fact, right now, guys, Snowflake is trading at $280 a share, up 4% today alone. If you would have bought this stock at $200, you would already be up 40% on your investment. Now, this is a high risk, high reward type play. The management team is really why I'm interested in this stock. I've been following this management team from several companies, making money everywhere they go. They're an awesome Batman and Robin duo. I call them Frank Slootman and Mike Scarpelli. This is a great company, but let's look at it, because let's look at NVIDIA and let's see how it compares with some of these metrics. So safety score, here's the thing, watch this. Safety score is only a 5. Now, why is that? Well, valuation, it's expensive. It's really expensive, right? And you think of hyper growth stocks, it doesn't get any more expensive than Snowflake. And there's also competition. There's plenty of other vendors that do what they do. Now, I do think Snowflake's doing things that differentiate themselves from the competition, but you can easily argue that there are some threats to the business when you think of how much the price of the stock is and the competition out there. So 5 for the safety score. Growth score, only one on my list. Out of my top 25, it's the only one that gets a perfect 10. Now, they're not profitable, but last quarter alone, they're up over 110% year-over-year growth on revenue. They're going to continue to grow and grow into that valuation. Up next, moat score. So what's their moat? It's probably about a 7. Like I said, there's plenty of other competitors that do what these guys do, and you think of big data. And the management score, 10. Of course, I mentioned earlier, Frank and Mike, these guys have really turned anything that they touched into gold in their entire career. So growth score 10, management score 10, but the safety score is only a 5. The moat's only a 7. Tread at your own risk at these prices. I definitely would have bought it sooner, but I do like this stock. I still think it's an opportunity long term, and it's one that I have as a high conviction stock pick in my portfolio. Okay, up next is Amazon. Now, it's my top position in my portfolio, and I get this question all the time. Why do you have Amazon? Why don't you go for more growth? The answer is conviction. As I mentioned earlier, part of my job, once I have the wealth, is to preserve it, capital preservation. So I don't need to be in hyper growth mode. I think these metrics will really help you when you think of Amazon. The stock just came down after earnings. It's trading around $3,300 a share. I think it's an opportunity, especially if it can go lower. Anything close to that $3,000 a share long term, I think is a good buying opportunity. That's my opinion. This is my largest holding. I continue to hold. You're going to see the metrics and understand why. Now, the market cap on this is $1.66 trillion. So it's a massive mega cap stock. The PE ratio is only about a 57.9. So that's actually really interesting when you look at the growth metrics that it actually has. Now, some people have actually said if Amazon ever gets broken up, that Amazon Web Services would be worth $2 trillion market cap, just that business alone, AWS. So that's not a reason necessarily to buy the stock, but it certainly helps with my conviction level. So when you think of safety score for me, it's probably a 10, but I'm going to give it a 9 just because there are some risks, I suppose. You know, there's always going to be risk and it's hard to get a perfect score. So we're going to go with 9. Now, growth score, this is already a $1.6 trillion market cap. So we're going to give it a 5. So this is not in the portfolio to be a growth stock. It's in the portfolio to preserve capital because I have conviction that the company will still continue to grow, be successful, increase profit margin, and that the stock will be worth a lot more when I need the money in 5 or 10 years. Now, as always, guys, if the story changes, you can sell a stock. So it's not that you marry a stock, but I have conviction for these stocks we're talking about today that they're going to be worth more and they're going to do well over the next several years. Moat score on this one, we're going to give it a 9. And management score with Bezos, it was probably a 10. It's probably a 9 now with the new CEO. I had it at an 8. I kind of waffled from 8 to 9. I'm going to give it a 9, a solid 9, because the current CEO has been there a long time. He really was was groomed and mentored by Bezos, and he's done a great job. So management score across the board, including the board of directors, is very solid. We'll give the management score a 9. If you like this content, guys, please do me a favor, hit the like button, drop me a comment. If you want to see my top 25 conviction stocks and all of the rankings, check out Fired Up Wealth, Patreon, and join the Discord community. I appreciate your time and attention. I hope you have a great rest of your day. Take care.